Okay, problem 8 of module 1819 is another bank reconciliation. And as you remember from bank reconciliations, we have two sides. We have the checkbook that's our ledger, and we have the bank statement, and we have to make the necessary additions or corrections to come up with that. Well, let's take a look. They tell us that the checking account, the bank statement from the checking account shows a balance of $15,734.87. Let's see if we can find the checkbook amount, the amount from the ledger. Outstanding checks, we'll need that, but not for here. Go through. Okay, this is another one of those where they don't give us the unreconciled cash balance from the books or the opening cash balance. So we have to figure that out for our own, starting with what they give us, which is the bank balance. So we'll start with the bank balance, and then we'll have to go through and undo some things to find out what the checkbook's going to say, and then we'll work our way back into the reconciliation. Well, let's go through. They tell us cash receipts were not deposited until the day afterwards, okay? So that means those deposits are in the checkbook, not in the bank statement. So if we're creating the checkbook from the bank statement, we have to add those. That's the checks. Or deposits, I'm sorry, deposits. So because we know about them, they're in here, but the bank doesn't know about it, so we have to add those. And I skipped this one, sorry. The checks are the same deal. The checks have already been recorded in us, but not in the bank statement, so we have to subtract those checks because the bank doesn't know about them yet. Because remember, we're trying to go from the bank's numbers to figure out what our number was. We wrote a check for $257, so that's part of our amount, and it was recorded by the bank, but we recorded it as $275, so that's an $18 difference. So our books have to be reduced by $18. And remember, what we're doing is we're starting with the bank balance and we're undoing what happened. Now, the bank withdrew $560. They're supposed to. We're okay with that. But that would not be in our books yet. We're trying to go from what the bank knew and reconstruct to what ours should have been. So we have to add back that mortgage payment of $560. It's kind of making you just sort of twist the way you think about this. We have to go back, okay? Again, the bank service charges. We have to add those back because they're taken out of the bank balance, but we don't know about those yet, so we would have to add those back. $25. And starting to think we're taking what we know from the bank balance and we're unadjusting it to find out what our unadjusted cash balance would be. Then there was a deposit of $930. We already handled this one. Was recorded by the bank on December 13th, but it did not belong to us. Okay, so We don't have that on our books. It's not ours. It shouldn't be in our books. To get from the bank number to our books, we need to take that 930 out. So that bank error, 930, we have to take that out. And the bank statement included a charge of $80 for an NSF check. The check was returned. In other words, this has already been reduced by that $80, but our books won't know about that yet, so we'd have to add that back. So we have to build from the bank statement, undo all of these things, and when we do that, we come up with what our balance would have been, and that works out to be $14,649.97. Now, we can do the bank statement by, we now have the beginning balances for both sides. $14,649. Yep, okay. Now we can go through and do the bank statement. As such. Here's our bank rec. Now we have all the numbers we need. Make sure you can see it all. Widen that out a bit so we have plenty of room and we can see everything. And now we're good to go. Okay, the balance per the bank statement, they give us that $15,734.87. And then we had deposits outstanding, so we have to add those of $630. We had that bank error of $930. We need to subtract that. And we have the checks outstanding. We're given that number. We have to subtract those, $1431.90. So when we do that, we come up with a corrected cash balance from the bank of $14,002.97. Now, let's do our side. We start with $14,649.97. That was that number we had to work pretty hard to come up with. Then the error in the recording check of $18, we add that back to us. We also have to deduct the mortgage payment, the service charges, and the checks of $560, $25, and $80. And when we're done, when you do all of that, you come up with $14,002.97. So our bank statement does indeed balance. Now, we're not done yet because some of these resulted in some errors, and we have to go through and undo some of the errors. Because some of the errors require journal entries. And let's go through and pick out the ones that require journal entries. The rent expense is going to need a journal entry. Okay. Payment of rent, so that's rent, expense, and cash. So I'm going to do that for $18. I'm going to debit cash and credit the expense for $18. And let's see what else I have to take care of here. Let's just go through the rest, see what we have. The bank withdrew $560 for the mortgage payment, and the interest of that was $405. Okay, so there's an interest expense. I need that piece. So I have interest expense, $405. And remember, the total payment was $560. So the reduction to the note payable is $155. Then we have a bank service charge, it tells us that, $25. And we have that bad check of $80. Okay, so anything that I've hit in orange is a journal entry. So we have to put that, we're putting that back into accounts receivable. And when you add those up, it's a credit to cash for $665. Okay? And the last thing it asks us is what would they account for, what would they list as cash and cash equivalents in the current assets section of the balance sheet? Well, the cash balance in the checking account, which was, what was the corrected cash balance? $14,002.97. Petty cash gets added. And we have T-bills. They withdrew $15,005 from the account, purchased T-bills. They recorded in its books. Half of the T-bills mature in 2 months and the other half in 6 months. So the half that the half that mature in 2 months are current, so they get counted as cash equivalents. So let's put that in, $7,750, half of the $15,000. And when you add that together, we come up with $21,952.97. And that's our cash and cash equivalents. Pretty good way to end this chapter. Ties together pretty much all we talked about with regards to bank reconciliations and taking the information you have and making it work.